All right. It's the 5th of Jan. It's a Wednesday. We've got just over 30 minutes to the NY Open. Just check if the sound is all good. Yeah. Yeah, I think we're good. All right, we're going to get to the charts in a second. Okay. All right. 30 minutes to the NY Open. Let's start with the daily calendar. Let's see what news we have today. So we've got uh, some employment change news, and then ISM services PMI. Employment change news is in about 45 minutes from now. Services PMI is in about 2 hours from now, right? So these are not important news events. They're not going to do much. So there's no need to worry about that. But uh, that's 15 minutes after NY Open. So it's good sense to just wait for news before you start looking for trade setups, right? Because that's just 15 minutes from the NY Open. So, all right. Okay, let's get to work. So on the daily, we're very, very bullish. We're very bullish on all high time frames. On the weekly, look at that. Look at that. That's 2,750 pip climb on the weekly, right? On the daily, we're very bullish. Monthly, weekly, daily, 4 hours, 1 hour. We're bullish on all the time frames, right? So really doesn't make sense. At least looking at the daily and the 4 hour doesn't really make sense in looking for any sells at all, right? Now we've closed a strong bullish candle yesterday. We hardly um, we hardly pulled back today, and we already have moved nearly 400 pips, right? So yeah, yesterday's daily candle also was about 380 pips, 385 pips. The day before that was 400, was a 600 pip candle. So there's a lot of volume this week. Just as anticipated, we're getting into NFP this week. So the last 3 days, Monday, Tuesday, and today, we've had a lot of volume already today, right? So a lot of high volume days, right? Over 350 pip candles every day. Today also we might get to 400 pips. I don't know. Let's see. Again, no information on the left. So just a second. Yeah, so no information on the left of the chart. So all we have is 2900. That's all we have, right? That's the next area where price can find liquidity. Now, between here and 2900 is a 300 pip move. Can price reverse in that move? Of course it can, right? But we don't know where that's going to happen because there is no information on the left. So at any point in this 300 pip move, price can pull back 100, 200, 300, 500, even 1,000 pips. Price can pull back to grab liquidity, to head higher, right? So, but all we have on the chart is 2900. As I've said several times before, I hate trading at all-time highs because there is no information. There is not much zones on the chart. There is nothing to really analyze on the chart because we're at all-time highs. Okay, so we can only look for pullbacks and opportunities to buy. Um, okay, so that's on the daily. Um, let's just go to our for now. Before we go to the trading chart, we got some time. We got about 45 minutes for analysis today, right? Because you got a news event coming in 15 minutes after NY Open. So I'm going to take my time today, and I want to kind of show what happened. So right now, there is the beginning of a trade war that's going on, right? Between Canada, Mexico, the US, soon to get China involved. and it's very similar. It could be. It could be. I'm not saying it is. I'm not saying it is very similar. I'm saying it could be similar to something that happened in 2018 Jan. All right. So in 2018 Jan, we had a similar situation, a trade war against with China. Uh, the U.S. had a trade war. Sorry, not we. The U.S. had a trade war with China that went on for about a couple of years, about a year and a half, I would say, about a year and a half to, yeah, 1 year, 10, 11 months, a year and 10 months, a year and 11 months, almost 2 years. And if you look at what happened on gold, right, let's just very quickly go back to, I did put a line there. I just want to show you guys what happened. 2018, right? So around here, this is when they started discussing um, the possibility of um, tariffs against China, right? And you can see what happened to gold. Gold just pushed up 1,250 pips, right? Uh, I think it came in around the first of Jan is when the first or second of Jan is when the yeah yeah 28, 29, yeah. So around the 2nd of Jan is when uh, they actually got implemented. I think around the 1st of Jan, I think. That was a weekend. So look at that climb there, the 650 pip move. But they were discussing it right from December, right? Mid-December, they started discussing it. So you can see how um, prices had already been kind of like they were anticipating this kind of trade war to happen, and it did happen. And look what gold did. Gold moved 1,250 pips, right, in a single direction, just kept going up. And then that was Jan 2018, and then we started dropping in April, right? We started dropping, and we dropped. Was that April? Yeah, in April we started dropping, and then again in August we started climbing. So this is a period of almost 2 years, right? Uh, so we dropped in April to August, we kind of dropped about 2,000 pips, and then in August, towards the third quarter of the year, we started climbing about 4,500 pips, right? All the way until they put kind of started phasing out the tariffs, started phasing them out. It took about a 2 year period for them to since they started to start phasing them out, right? They haven't really phased them out; they're still in place, but that's what happened, right? So you can see that huge climb, right, over 1,250 pips. Then prices kind of this is on the daily chart, right? So these are big moves. These are 500, 600 pip moves, right? Kind of you know averaged out, and then in April we started seeing a decline that usually happens on gold. Prices start to kind of drop on gold around March, April, and then August it starts to climb again. End of August, September. That's when prices of gold start climbing again, right? And you can see that climb just continued about 4,500 pips up. Okay, so that's what happened in 2018, between 2018 and 2020, 2 years. Now, something similar could happen. We are we're getting into similar trade wars now with Canada and Mexico, and China is soon to get involved. There are talks of imposing tariffs on China again, right? So, are we going to see? Are we going to see 3,000? Are we going to see 3,000? Possible, very possible. 3,000 is very possible, right? Are we going to see it in the next month? This month, by mid-Feb? Are we going to see 3,000, or end of Feb? Are we going to see 3,000? Very possible. right? Just 1,300 pip move up. This is just food for thought, just on a very macro level, um, what where possibly gold can go to, right? Headed around to 3,000. That's very possible. Okay, let's get to a trading chart. Before we start drawing our zones, I always do a recap of what happened the previous day, of the trade idea that I gave the previous day. And the trade idea that I gave out the previous day, yesterday, was buys, right? So I said, wait for the pullback, wait for M30 support to form, wait for the pullback. And so this candle, I ended the stream right at this candle, and I said once this candle forms, it's going to close. I think I waited for the candle to close, or just before the candle closed, a few seconds before the candle closed, I ended the stream. So I said that candle is going to close a bullish candle, M30 bull candle, which is going to a very strong bull candle outside of the zone, and we are forming M30 support. So I said once M30 support forms, that's your support. That means price is heading higher. There's a high probability of price heading higher once we have support form. I'm not a breakout trader, so I always need the retest. I want to see price pullback. So once this M30 support forms, I go down to the M15 time frame and I draw my fib. Okay, and you guys have I've shown it dozens of times how I draw my fib, right? So this candle broke this low, this candle broke this low. I need to see minimum of two M15 breaks from the low of this to the high of, for the high of the candle to the low, draw the fib, and price came, touched the demand zone perfectly. There's a drop, base, rally, right? On the M15 time frame, I'd placed a pending order there, triggered perfectly, right? Stop loss under the candle, that's about 40 pips. And I said TP, final TP would be 2800. 2850, right? I said you can take partial positions around 2841. If you watch the last 3 minutes, 3 minutes, or 5 minutes of yesterday's stream, stop loss, everything was given out, right? I said wait for, once the M30 candle closes, wait for the retracement. No retracement, no trade. That's for me, right? If you're a breakout trader, you can take the breakout of this trade, but then you would have had to hold drawdown and wait patiently, right? But for me, no retracement, no trade. So I wait for the retracement to get close to these areas, either to the optimal entry level or the sniper entry level or anywhere nearby, right? Anywhere under this start of the fib, where I start drawing the fib, anywhere under that, right? So closer to these, the better, then the lower my risk is, okay? So when I see a demand zone like this, I always enter at the demand zone. That's the best, right? And if I see if you're taking sells and you draw the fib and you see a supply zone on the 15-minute time frame or the 5-minute time frame, always best to enter to place a pending order at that supply zone. So placed a pending order, triggered, and I said 28. I think 2841 was one of the TPs. Then I said 2846, and then 2850. So I didn't take out any positions once I saw this candle close above. I just kept my stop loss as is and took it out there. So that was a 40 pip risk and 170 pip trade. Right, that's about little over 4 RR trade. Okay, so that was yesterday's trade. Let's get rid of all of these and start the process again. We have nothing on the 4 in terms of supply, so we're going to have to look at the 1 hour probably. Let's get rid of all of these. Okay, perfect. All right, so now we're going to have a look at what Asian session, London session did today. But price has already moved 372 pips. The last 3 days, the previous 3 days, the average daily range is just over 400 pips. We've almost covered that distance today. Just keep that in mind. We've almost covered that distance today. It's just back, it's just knowledge to have. It's not something that you used to trade that I used to trade with, but just background information, right? Price has already covered the daily range, almost covered the daily range, right? 372 pips it's done today, and it's got about 400. The average daily range is about 400 pips, and we've done about 372 already, right? Okay, so the closest sub on the 4 hour is that we have a rally, two base-in candles, and a rally. So the leg in, two base-in candles, and a leg out. Okay, we're going to take a look at this area. I've always say when a 4 hour candle stops at one of these key levels, either the at any one of these key levels, either point number 2 at the BRN at a psychological round number, or at weekly SR, we got to go down to this lower time frame and have a look at it, because it's very possible that there's a zone there, right? We'll have a look at that later. Now here we got to redraw this zone because now we have more information since this candle has closed, right? Yesterday we didn't have this information, but now we have a candle close here, so we have more information. So I consider all of these as part of the base. So that's the leg in. Those are like the two bookends, right? So you have this candle, and then you have this candle, right? Your two bookends, and all these candles. This is a range in between. There's a range inside that, a 200 pip range inside that. Okay, so let's get rid of this. Yes. Okay, so you have a rally, one, two, three, four, five base-in candles, and a rally. Okay, and that we've covered about 600 pip to the downside. That should be good enough. There's no need to increase that further, and that's 4 hour demand, right? Let's get rid of this. You don't need this. Sorry. Okay, let's put the numbers on this. 937, 736. 937, 736. Okay. And the numbers on this, 269, close, 269, and low is 265. 269, 265. Yeah. Okay. We got a 4 hour demand there. This is the new zone. These are the two new zones that we've drawn for today. Okay. Now we're going to take a look at this area on the 1 hour time frame. Yeah. So there is a, a break there. Let's have a look at it on the 30-minute. Probably be clear on the 30-minute. Yeah. So right there, that's a leg in. That's a doji. I mean, that's a base in candle. Sorry, it's not doji. It's a base in candle, and that's a leg out, right? So I'm going to mark that candle. Let's take a look at it on the 1 hour. It's 30 pips. 28. Yeah, that's better. Yeah, that's better, right? So this is the leg out. So it's clear on the 30-minute, right? Not on the 1 hour. So that's the leg in, three base in candles, and that's the leg out. I always say if you're struggling to draw supply demand, find the leg out first, find the move out of the zone, or the leg out of the zone, the leg out or the move out, whatever you want to call it. Find that first, and then work backwards. Okay, then work backwards and find the base in candles and the legging, right? It's much easier that way. 379 and low 786. 379786. Okay, perfect. Yeah, good. Yeah, and you can see price tried to get back in, wicked into that zone, just pushed up after that. From there, we pushed up another 230 pips. Okay, now let's see if you have any supply at all, right? On the 4 hour, there is nothing. On the 1 hour, there is a rejection here. There is 1 hour resistance created. Let's go down to the 30-minute and see. Yes, we have a candle there. Okay. We have to mark that candle. Now, the only reason this is happening is because there's absolutely no supply on the 4, right? And because we're at all-time highs. But when we do see at all-time highs, we have to go down to the lower time frames. We have to, because we have to see why price has stopped. If this area wasn't important, price would have just created a 1 hour bullish candle here and continued. But it stopped, right? Now we don't know why it stopped because there's nothing to the left. So we have to pay attention to this area, okay? That doesn't mean you look for sells, but you just have to mark it on the chart. So that's the leg out. Maybe on the 15-minute, yeah, that's clearer. Somewhere there, okay? Yeah, so yeah, the 15-minute is there. I mean, it's really, I don't like doing on the 15-minute, but we just don't have a choice, right? We gotta have to, because on the 1 hour there is a rejection, and it's that wick, right? So that 1 hour wick is only visible. Why? I mean, the base there is only visible on the 15-minute. It's not visible on the 30-minute. It's not very clear. It is visible, but it's not clear. But on the 15-minute, it's clear. You have your leg in, you have your base, 1, 2, 3, 4 base in candles, and then your drop, right? So I always wanted to see that base because then it's easier for me to understand the zone. 013, high 704, 704, 013. Okay, perfect. That's H4 supply. Okay. And we got H1 demand right here at 2850. Okay, done. Just save this very quickly. Okay, got plenty of time here. This is all a very slow move up. Price can easily come down to correct this. Just keep that in mind, okay? Keep that in mind, what I just said. This is price. We're going to talk about this. We're going to talk about this, but just keep this in mind, what I just said. Price, this is not a clean move up. This is a cleaner move up. See, 3 candles straight up. 3 candles made up 270 pips. This is 219 pips. 1, 2, 3, 4, 5, 6, 7 candles to get up 219 pips, and 3 candles to get up 270 pips. You see the difference in the two? This is volume. This is no volume. Price is just inching its way up, right? So this move can easily, price can push through this because there is no liquidity. That's all it means. There is no liquidity here. Price can easily push down, grab liquidity, and continue high. Okay, just keep that in mind. Let's continue. All right. Next step. is, now that we have our supply demand zones, we have to identify high liquidity zones. Out of the new zones that we drew, we're going to identify, we have three new zones. One supply, sorry, this is not H4, this is M30 supply, right? Sorry, it's 1 hour supply. You can say it's 1 hour supply, not M30, because it's on the H1 supply. Okay, yeah, H1 supply is better because it's on the 1 hour. We see the rejection on the 1 hour, but we go down to the 15-minute to draw the base, right? But it's visible on the 1 hour, so it's 1 hour supply. Now, is this price is already here? Is this a high liquidity zone? Let's go down to the 15-minute and see if you've taken out anything to. Yeah, we have to go down to the 15-minute. Yeah, so we have a drop here, right, and a rally here. So there is a base there, and price has taken out that. It has taken out that, right? So that is a high liquidity zone. Now, again, the only reason we're doing this on the 15-minute or the 30-minute, we're looking at a very smaller time frame to identify if these are high liquidity zones or not, or to identify the base of the zone, is because we're at all-time highs and we don't have price action. We don't have high time frame price action. Okay. If we had, we wouldn't be doing this on the 15 or the 30. We'd be looking at the 4 hour and then maybe on the 1 hour, but not on the 30 minutes or the 15 minutes. Okay, so this zone that we drew here, has this taken out anything to the left? We are at all-time highs, right? We are at all-time highs, so there is nothing to the left there. Um, we mark it on the premise of, has price taken out previous highs? So if you look here, there was a high here, price dropped, took out that high and moved up. So this did take out that high because there is nothing to the left, right? So if you draw a line here and go onto the 1 hour, the 4 hour, and look left, there's nothing. There's nothing to the left, right? So, but this 4 hour high was taken out by the move that started here. If you just look at it on the 4 hours, right? A very simple explanation, this candle high, the 4 hour candle high, was taken out when price touched here, 2850, and pushed up. So if you go down to the 1 hour now, or the 30-minute, it's a little bit clearer. You can see the high, you can see the drop, and this move up took out that high. So that's a high liquidity zone. Again, there is no price action to the left. That's the reason we have to look at these time frames. Okay, this zone. Did it take out anything to the left? Yes, it did. Again, there's a rally and a drop. So there is a base there on the 15-minute. If you go down to the 15-minute, you'll see a base there. Right there. That's the base. Rally, single base in candle. Rally, single base in candle, and a drop. And this move up that started here took out that high. Right? There you go. That high was taken out here. The move started from this base to go up and take out that high. So this too is a high liquidity zone. Okay, done. Those are the zones for the NY session. Okay, let's just save this. Okay, next step. If price is in a high liquidity zone or in a supply demand zone, which is a high liquidity zone, then the next step is to identify a high liquidity candle. Now, what's a high liquidity candle? It's the largest candle in that zone. So if it's a supply zone, the largest bearish candle. That's all it is. Very simple. If it's a demand zone, it's the largest bullish candle. You can start from the 1 hour and go down to the 15-minute or sometimes even the 5-minute to look for the zone, to look for the candle. But most of the time, the candle is visible on the 15-minute time frame. Right? So let's start on the 1 hour. So we have this huge wick here. Right? We're going to mark that wick. Okay, then going on the 30 minutes. We still have the same wick. Okay, let's go down to the 15-minute, and now we have this large candle here. It's a 64 pip candle. We're going to take the whole candle, go down to the 5-minute, and we have a candle with no top wick. Sorry, we have a candle with no top wick, right? So price can easily come and take out this high and continue higher. But uh, according to the rules I follow, I have to mark it out as a high liquidity candle. So I'm going to mark it on the 15-minute. So that high is 704 and 056. 704056. Okay. All right. Let's just take a look at the 5-minute again. 43. Yeah, we're going to come above this candle high. Price is going to break this high. This one right here. Right? This high is 2872.67. Price is going to come break this high. And then let's see if it's going to reverse that. So this, let me just put a line there, the price level right there. This high is 72.67, low is 72.64. 72.67. Yeah, we're going to come and break that high. All right, price is going to come up, so it's about 22 pips away. We're going to come and break that high. Let's see if we go higher than that. I'm just going to keep a price level there, just so that that's what I'm anticipating price to do. Okay, NY session has just opened. We've got news in 15 minutes, so we're going to continue with the analysis, and we're going to wait. Okay. Now, if price drops, where can it grab liquidity from? Again, back to this chart. It can grab liquid at any one of these areas. So what's the closest area that we have out of these 5 on the chart? The EMAs. Price can come, drop to the EMAs, grab liquidity from the EMAs or near the EMA and push back up. That's one, right? The second is this demand zone, 1-hour demand zone, right? And then the third is the PRN, right? So if it comes to the 1-hour demand zone, is there a liquidity candle inside this demand zone? Again, let's start from the 1-hour. I don't see one on the 1-hour. 30 minutes. We've got this candle, which is a 37 pip candle. It's a 43 pip candle. Let's go down to the 15-minute. It's nothing on the 15-minute. Let's go down to the 5-minute, maybe. Yeah, this candle right here on the 5-minute. But what I'm going to do is, I'm going to draw that candle. $34, $29, $30. Yeah, just keep it on the 5-minute. $43, $36. Yeah, let's use a 30-minute. 414985. 985. Okay, perfect. So that's the liquidity candle. Aligns with this as well. Or you tapped into it. Perfect. That's a candle. Okay, if price comes further down into this zone, let's look for a liquidity candle in here. The largest candle is this. That's a 97 pip candle. Let's mark that candle out. Let's go down to the 30-minute. Still the same candle. Let's go down to the 15-minute. 66, 56, 63, 66. Yeah, I'm going to take the 30-minute candle. 91, 98. It's too much. It's too much. 30-minute is too much. I have to look around the 15-minute. 119, 63, 52, 66. It's this one here. Yeah, I'm going to keep it to this one. This candle right here. 933265. Okay, perfect. Okay, I don't think we need to look any further down. That's plenty of area. It's about 330 pip drop. If price needs to come down, it needs to get through all of this to come here, right? So I'm not going to look in for a liquidity candle in here. We can do that tomorrow. If price starts to come down, we can look for one of this liquidity. We can look for a liquidity candle inside this zone, this 4-hour zone tomorrow. But there's no need to do it today because price has to literally get through all of these liquidity areas. It's got to get through the EMAs, both of them. It's got to get through this liquidity candle. It's got to get through this BRN, and then it's got to get through this liquidity candle to come to this, right? So that's one, 2, 3, 4, 5 liquidity levels to come to this one down, right? And that is 400 pips away. So let's see. Price can always drop 400 pips easily, but we don't need to worry about that for the next couple of hours. All right, so we got about how long? 8 minutes for news. Let's wait for news. Let's look at what price has done. Just give me a second. I'll be back in a couple of minutes. And then we're going to take a look at what price has done in the Asian session and the London session, mark our Asian highs, Asian lows, London highs, London lows. See the story of what price has done throughout the day, and then make an assumption of what price can do in the New York session, the first couple of hours, first 2 to 3 hours of the New York Open. Okay, so I'll be back in about 2 minutes. Okay, right. So we got about 6 minutes of news. Let's take a quick look at what price has done so far. 50-minute time frame. Where are we? Let's look for the daily open. Okay, so that's where price opened. Let's just zoom in there. Okay, so this is where the daily candle opened, right? That's the open price is 2842.31. Then price made a high here, low here. So this would be the Asian low, 980. Okay, and then we have a here. Slow 502. So no 4. 704. Okay. It was 6. Okay, so this is what price has done. Okay, so we've had the market opened here, created a high. We came close to 2850. We couldn't close above it. Came back to grab liquidity from this liquidity candle. Came very close to it. Grab liquidity. No bottom wick. Pushed straight up. Closed above 2850. Continued higher. And that's in the Asian session we traded about 182 pips, and then we dropped down. Okay, let's just get rid of this from here. Okay, then we dropped down, uh, grab liquidity from this liquidity candle that we had created on the 30-minute time frame. We created this liquidity candle, dropped to that, grabbed liquidity from it, went high, closed above the Asian high. This candle closed above, continued higher, and then came back down. Uh, Tried to get back into that candle, couldn't. There was a lot of bullish volume, created the London low, and went straight up. Okay, and in the London session, we traded 200 plus 220 pips, 180 pips in the Asian, 180 pips in the Asian, 220 pips in the London session. So we've traded quite a bit. We moved about 372 pips today. So that's a lot of trading in the Asian session and the London session. Now, if price rejects this area, all right, if it cannot, if we reject the London high again, then we're going to probably drop to the Asian low, to the Asian high, sorry, to the Asian high. There's the Asian high right here, right? We're going to drop to the Asian high. If you reject the London high again, We've tried to get up into it. I believe price should tap 2872.67 because there is no top wick on that candle. It doesn't have to, but it might because there is no top wick there. So if we are to push down, we need a rejection from here. Sorry, we need a rejection from um, if price is to drop down, we need a rejection from this area, right? Around 2872. From around 2872, we need a rejection, or just above that, we need a rejection for price to drop down. Now on the 30-minute, let's take a look at the 30 minutes quickly. We haven't formed resistance yet. This is old. I start looking from here onwards, from the pre-NY session, which is 1400 hours IC market server time. That's when I start looking for any sort of important price action, because I always say the price action that you look for has to be during high volume time, and that's the reason why I draw these at these certain hours of the Asian high, the Asian low, the London high, the London low, because during those times, if you see, this is the London Open. So that's important. That low is created during the London Open, right? This high is created at the Asian high at the end of the Asian session. So around about 3 hours into the Asian session, right? And this is at the end of the London, the first few hours, the first 3 hours of the London trading session. This high was created, right? So now if he cannot get above, we create M30 resistance again, then it's very likely that we drop here. Let's take a look at the 15-minute time frame very quickly. We have a candle that has broken this high. This one's broke this high. I would like to see trade. We got a minute more for news. Like to see price probably drop. So drop has already started. Yeah, drop has already started. 094714. 09794. Okay. But I'm going to wait. I'm going to wait because I think price is going to come into this. Because even if I did take a trade, a sell here, my stop loss would be very big. Because the safer stop loss would be above the liquidity candle high. Sorry, above the liquidity candle high, and that's too wide. From there to there, it's way too wide. That's 80 pips. So I'm going to wait. If price continues down, so be it. Then there is no trade for me. Yeah, so that's news. Yeah, we just had news. Nothing happened. Yeah, we just had news. Nothing happened. We just had this candle with no top wick. Is that the... it's a news candle. We should come back and create a top wick. Let's see if it's the... Yeah, we should come back and break this eye and create a top wick. Yeah, we're coming further high. We're coming further up. Yeah, we're coming further up. Should break this candle this high. This candle will create a top wick and maybe come deeper in. And let's see if we come here and get a rejection, right? I want to see M30 resistance form. That's what I want to see. If I'm to take a trade, if I'm trying to take a sell trade, I want to see M30 resistance form. Until I see M30 resistance form, I'm not doing anything, right? But again, this is a count if I take sells. I've got to keep in mind that this is a very, very risky trade. Very risky trade because we're very bullish and this is a counter trend trade. And the only reason or the idea for this trade is that if price rejects the London high again, which is this candle high, 2877 basically, if you cannot get and close above 2872, if you can't close above this candle, if you can't close above this, the body of this candle, 15-minute candle, right? So around 2872.50. If you don't have a 15-minute candle close above it or a 30-minute candle close above it, and we reject this area, anywhere inside this, we reject in this 40 pip area, we reject again, then I'm anticipating price to come down first in the NY session, right? In the first hour and a half hour of the NY session, price to push down. But it needs to get there first. I'm not going to chase price when it's here. It needs to come up here, and then I want um, to see if there is M30 resistance. I've got to wait for M30 resistance form. That is number one, M30 resistance form. Number two, I would like to see this area being rejected. Now, it may or may not happen, right? But I would like to see that happen for me to take a trade coming down. But the idea is that if price cannot close above this, that means we're rejecting the London high to push down, probably to grab liquidity to head higher. So we're going to wait. This candle opened here with no top wick and went straight down. So price should come above, should come up again. Should come up to create a top wick on this candle. Maybe this candle or the candle after that should come up. Let's see. But the first thing I'm waiting for is M30 resistance to form. And that is I've got to wait about 9 minutes and 30 or 40 seconds for that, for the 30-minute candle to close. Once I see M30 resistance form, okay, maybe that's the first step towards looking at taking a sell. Not jumping into sell, but looking at considering taking a sell. Need to see M30 resistance form. Okay, this candle has tapped that liquidity candle, by the way, okay? This candle here, this 30-minute candle, the high of this 30-minute candle is 2877070, which has tapped this liquidity candle, right? There. We've tapped it. We've tapped it several times. This is the candle, 30-minute candle open. This is where the candle opened, and it tapped it once, twice, three times, and dropped down. 55 pips. Let's see if we can. If it seems like we're going to close a bearish candle and form M30 resistance, but I want to see that pullback to be able to get in on a trade. Okay, I'll be back in a few minutes. I got about 7 minutes for the candle to close, so there's some waiting to be done. Okay, I'll be back in a few minutes. We'll have to wait for the candle to close. 7 minutes for the candle to close. I'll be back in a bit. It's got about 2 minutes. So the 30-minute candle is closing bearish. Seems like we're forming resistance. It's fine. We need to see that pullback for me to get in on a trade. Um, yeah, 90. It's 196. Already tapped it. Already tapped 796. Yeah. 40 seconds more for the candle to close. We are forming resistance here. But I would like to have seen price come deeper. 876. Okay, let's see if we. Yeah, this is just too wide. It's too wide. Yeah, doesn't seem like we're pulling back. Just tap 2867 and pushing down. Broken the M30 candle low. Doesn't seem like we're pushing back up here again. I would want to see at least price tap 2868 again. 2868. Yeah, just not enough of a pullback. Anyway, let's see what happens. Let's see if I think we're going to continue down. There's clean space after this. All of this is clean space. Once we break this low here, yeah, we have broken it. We should drop another 50, 60 pips to this EMA. There was no pullback, not enough. I needed the pullback to be at least to 2868. 2868 would have been good enough. 2868, yeah. If we pull back to 2868, that would have been great. 757. Yeah, it's just nothing. Yeah, we tapped the liquidity candle in the pre-NY session, just before NY opened. We tapped it several times, 1, 2, 3, 4, 4 times. and then we dropped. So there is no pullback. I had to wait. We had to wait for M30 resistance to form, which is that. But after that, price didn't really pull back. Yeah, it's gone. It's gone. I need to see that retracement. If I don't see that retracement, then I'm very uncomfortable in taking a trade. Then I don't want to take those breakout trades. The breakout trade would be as candle breaks the low of the M30 candle. I need to see that pullback to at least 2868. That's a drop, 4 basin candles and a drop, drop, base, drop, drop, 4 basin candles and a drop. Need at least a pullback here to take the trade coming down, maybe here to the London high. That's about 100 pip move down. But I think we're heading there. We're heading to the London high. Yeah, about 45 pips to go. Yeah. That happens. That's fine. That happens. Yeah, we've broken this low. We should continue down. Easy to here. Another 45 pips. Easy. Now, if you remember, I said this at the beginning of the stream, and I said we'll come back to this. That this is a very slow move up. Compare these 3 1-hour candles. Remember I said this 270 pip move to these 7 1-hour candles that made a 220 pip move. 1, 2, 3, 4, 5, 6, 7. 7 candles, 220 pip move. 3 candles, 270 pip move. No volume. No volume, price is gonna run right through it. Right? I said this. So keep that in the back of your mind. We're going to talk about it. And you can see that happening right now. When there is a lot of volume, bullish volume, it's tough for price to go through it because there is a lot of buying happening, a lot of buying volume. This is price inching away. You can see the difference between this rally and this rally. In 3 hours, price climbed 270 pips. In 7 hours, price climbed 220 pips. That's less volume traded over a 7-hour period and more volume traded during a 3-hour period. So when price is coming down, it'll go through this because there's little volume here. Less volume, not little, less than this. That's what's happening right now. So we've tapped 2862.5, right? We've tapped 2862 in fact. Yeah, 2862 we've tapped. So that was the move. I mean, that's the move that I would have wanted to see price pull back, get in on, take that move down, you know, bring stops to break even or take partial positions around 2862 at this fib level right here, 2862. 2862, and then next area is 2859.5. 2859.5 is the next area, 2859.5. And then beyond that is the London high. That is the London high, sorry, 2859 is the London high. Yeah, this is the London high, right? Yeah, that's a no, sorry. Sorry, I mean this is the Asian high. This is the Asian high. So that's where we anticipate price to come to, the Asian high. That's the first area, and that's where the EMA is, and that is 2859. Right? So 2859, yeah, around 285, 850 to 859, about 5 pips difference. Okay. Yeah, so unfortunate. There is no price made the move without an opportunity to get in for me. Yeah, there is. Let's see if price can come back up. On the 5 minute, we are rejecting 2862. Might be able to come back up. Um, yeah, we might have a NY session with a push down and then support created an NYSE session push back up. Or we might have a continuation in NYC. Depends on how much volume we have in the NY session. All depends on how much volume. Let's take a look at that. We have fairly large 50 pip candle. Yeah, so there is volume in the NY session. So since there is volume in the NY session, the NYSE session could either have a, a reversal or a continuation. So let's see, we've got about 45 minutes, about 50 minutes for the NYSE open. So price might just, we've had a 50 pip candle in the 15-minute 50 pip candle in the NY open, right? And then the next candle has also been also 50 pips. Two 50 pip candles. I'd like to see price pull back, but might not happen. 5 minute. Let's see if we're creating a bottom wick to continue higher. Above these wicks, that's the idea, above this, around 2868. 2868. 2868. Sixteen pips. Let's see if we can get a sell trade here. Safer stop loss always above the liquidity candle. Uh, if price closes above here, above 2869 or 2870, then we're coming deeper here. Might need to manage risk on these trades. If we get in, if I get in on sells, I need to manage risk on these trades and maybe look at taking themselves from here coming down. Anyway, let's see if price is going to come up first. I don't think so. I think we're just going to continue down. Yeah, we're just continuing down. Just a second. Yeah, we're coming down. We're heading straight down. No pullback. Yeah, so move down. That's fine. Price went without triggering the sells. So the idea was right. It's just in pull back to my entries. But the idea was that if we cannot get back above here, we rejected the London high, we form M30 resistance, which we did, then we're going to continue down. Now, unfortunately, I had entries up here. I wanted price to come, trigger them, and then continue. Didn't happen. That's fine. You know, sometimes that happens. Price just pulled up to 2867.14 and then continued, dropped another 70 pips, 72 pips, right? And we should probably continue down now. But the idea was right. The idea was we reject the London high. That's the London high. We had drawn all of this before um, the move happened. That was a London high. So the idea was that if price cannot go back and close inside here, that means we're rejecting the London high. And if you wait for M30 resistance to form, because it's a counter trend trade, and M30 resistance did form, wait for the pullback. I was anticipating price to come to 2868. It didn't. It came to 2867.14 and then push straight down 75 pips, right? So, and that's okay. That happens sometimes. You know, price just goes without you. It happens to me, you know, a few times a week. And that's absolutely okay. Yeah, it's got about. It's got to wait for. Yeah, price is pulling back. Okay, I'll be back in a few minutes. The price is just moving. It's moved. It's moved to his TP. It's moved to his TP. So the first TP level would have been the EMA, as I said. That's the liquidity area. We've moved to that. We've touched the EMA. So that's done. I'm going to just close the cells. Um, the move is done. Right? That's an 82 pip move. I was anticipating price to come up here and then move about 100 pips, but it didn't. Just touch that fib level and push straight down. Okay, so I'll be back in a few minutes. We have to wait to see what's going to happen now. Price is very likely going to range over the next 30 minutes. Probably after this candle close, we might range for a bit before the NYSE open, right? So we're going to take a look at NYSE open if there's going to be any opportunities during the NYSE open, and that's around the NYSE open is when I end the stream. So we'll take a look at the chart about 5-10 minutes before the NYSE open, and let's see what price has done by then to see if we have any setups for the next 2 to 3 hours of the session. Okay. All right. Yeah, so that was a very nice move down. 985 pips should continue down lower. Again, remember what I said here, the beginning of the stream. Low liquidity, right? Price cut through all of that. High volume time, single candle, 120 pip candle. And we still have about 8 minutes for the candle to close. Single candle cut through all of that, came to the Asian high, right? Now, very likely could come lower to the London low. That's the next. Once we tap this, and you have a 5-minute close below the Asian high, we're coming down another 20-30 pips to about another 30 pips to the London low, right? So you want to see like a 5-minute close below this Asian high, right? So basically a 5-minute close below 2858. Yeah, below 2858, a 5-minute close below 2858, and then we should drop down another 30 minutes, another 30 pips to the London low. And now that there we have a lot of volume, right? We have a lot of volume in the NY Open. It's 50 pips, it's 70 pips. Yeah. Now that we've had a lot of volume, 120 pips opened, right? 50 and then the pullback and 72, roughly about 120 pips in total. Yeah, 120. Yeah, 120 exactly. Since the NY Open, uh, we should have volume. Technically, we should have volume in the NYSE Open as well. But price will range for a bit, and then you'll have volume. Now, is the volume going to be a reversal, or is it going to be continuation? You'll have to wait for to see what price action forms on the 30-minute time frame and the M15 time frame, even on the 1 hour time frame, 1 hour to 15 on the 15-minute time frame, 1 hour down to the 15-minute time frame. Okay, so Philip, the stop loss, as I said, if you're taking sells, the safer stop loss is always above the liquidity candle high, right? Always above the liquidity candle high. But a more aggressive stop loss will be at the high of that fib, of the high of the fib end. Now, you saw how I draw the fib. I'll explain it again. You wait for the 30-minute candle to close. This is the candle close. You got to wait for this candle to close because this is a counter trend trade, and we've got to wait for 30-minute resistance to form. So when this 30-minute bearish candle closes, it's a strong bearish candle. This is not a doji. It's a strong bearish move, right? With a lot of volume. You got to wait for this candle to close. Once this candle closes, you got to draw your fib. So to draw the fib, go down a time frame to the 15-minute, and you look for the most recent two M15 high breaks. It's very simple, right? So this one broke this high and this one broke this high. You start looking from IC, if you're trading on IC markets, you start looking from 1400 hours. That is the pre-NY session, right? So right from here, you start looking right, okay? So you have this candle break this side, this candle break this side. You draw the fib from the highest high to the most recent 15-minute low. That's the fib, and those are the areas that I would like to see a pullback to. Now, the reason the fib is drawn are for several reasons. To know where to place your stop loss, to know where to enter, and to know where to have your take profit levels for all three of them. That's the M15 model that I use. That's the reason I use it, because it gives me ideas, it gives me a rough idea for the most three important things of the trade: the stop loss, the entries, and the take profit levels, right? So that's why these areas, the 3RR plus, the 2862 point, let's say, you can round it off. When you have something like this 2862.77, you can round it off to 2863, the closest round number, 2863, right? When you have 2859.54, you can round it off to 2859.5 or 2860, right? These are your TP levels, right? Now, if it gets through this, then it's coming down to this. And what's the closest area, closest round number? 2855.74, 2856. Okay? And the more aggressive stop loss is above. So to answer your question, the more aggressive stop loss is 2871, just above 2870.94. According to your broker that you trade, you leave 2 to 3 pips spread, wiggle room. I call it wiggle room. So if your if your broker offers you, let's say, 1 pip spread on gold, 1 pip spread on gold, then times 3 is would be your wiggle room, times 3 times 3.5. So if a broker is giving a 2 pip spread on gold for you, then times 3 is about 6 pips. So about 6 pips above that would be your wiggle room. That would be your stop loss. That's the more aggressive stop loss, right? The safer stop loss, as I always say, is above the liquidity candle high, because price at any moment can come into this liquidity candle to grab liquidity. That's the whole idea of a liquidity candle. It can come into a liquidity candle multiple times to grab liquidity until the liquidity in that candle is exhausted. Once it's exhausted, it'll go to the next liquidity area, right? The next liquidity area is one of these 5 areas, right? Now, unfortunately, on the chart, on the gold chart, we don't have those because prices are all-time highs. So I hope I've answered your question. The aggressive stop loss would be there above, so around 2871.1, 1.2, right? About 3 pips above that, because I have a spread of about 0.5, 0.6, so times 3, right? So I would put my stop loss about 3 pips above this, and then take the trade if price came here. It didn't. It just went without me. Now, there's nothing I can do about that. Those kind of things happen. It's out of your control. Um, you just have to patiently wait for the next setup. Now, you've got 30 minutes for the NYSE Open, right? 30 minutes for the NYSE Open. Price is very likely to range now. For the next 30 minutes, very likely to range, right? So you're probably going to see a pullback. On the 15-minute time frame, you're probably going to see price pull back up. And then we're going to have a wait for those candles to close. We've got to wait for the 30-minute candle to close. So 30-minute candle, the next 30-minute candle to close, because that'll give us an idea, not an assurance, not certainty. There's no certainties. I don't know. There's no assurance in trading, but it'll give us an idea of what could happen in NYSE with the NYSE Open, right? So that's what I'm waiting for next. I'm waiting to see how the next two 15-minute candles or the next 30-minute candle is going to close. So you just have to patiently wait for that, because this setup is done, right? Price has already moved down. We've moved down 120 pips already. If from this candle it's 86 pips, from this after the 30-minute, this was the candle, the close of the 30-minute candle. This is a 50-minute time frame, but this is where the candle closed. Then it pulled back to 1 second, just yeah, that's better. So that we can see these levels. So it pulled back to 2867.14. All right. Now, sometimes I have taken trades there, but to me that is not enough of a pullback. It's not enough of a retracement, right? I always like to see, I always have to take an entry above the start of this sweep. So in between between these two. That's where I like to take a trade from, in between these two, because that gives me a tighter stop loss. If my stop loss is tighter, then my RR on my trade is higher. Does that make sense? Right? So that is why I wait for price to come a little deeper to get a trade to come down, just like yesterday, right? So this was the 30-minute candle close. This was a 30-minute candle close. So this candle closed at 16:30. This one opened at 16:30. So if you go down to the 15-minute time frame and draw the fib, the reason draw the fib is here is this candle broke this low, this candle broke this low. Draw the fib and look at that, right? That's perfect. That is right where an M15 demand zone is. So that's a perfect amount of retracement, right? Small stop loss, 40 pip stop loss, price moved to my TP, to 850, right? That was the TP level that I had shared yesterday, the final TP level to 850. Now, why not beyond 2850? Because there's no price action to the left. I have no idea what's going to happen after 2850. I don't know if price is going to drop down 500 pips from 2850 or continue up another 500 pips, right? Because there is no information to the left. If we had zones to the left, then I would know, I would be able to take a calculated guess on where price is heading next. That's the reason for these zones. That's the reason for these zones. These zones allow me to take a calculated guess of where price is heading next. It's a roadmap. That is why I go through the trouble of drawing the zones, identifying high liquidity zones, identifying high liquidity candles, because it's a roadmap of where price will go next. Because it moves from one liquidity level to another liquidity level. Yeah, so this is the pullback, just as anticipated. Here's the pullback. Price is pushing up. I'm going to take a buy here. I'm going to take a buy here, and I'll explain why. We tapped the liquid, we tapped the EMA. Stop loss under there. Yes, tighter stop loss to move higher. Let's see, I might get stopped out on this, but I'm going to take a trade here. Safer stop loss under this candle here. Two low breaks, high 255859. 859. This low right here, 5758. Right, let's see if we can get there. We tapped the EMA, we rejected. Um, that's a M30 candle. In the London session, that's a liquidity candle. All right, 67 pip candle, right at the EMA. Let's see, stop loss under that candle, under 57.58, so around 57.5 or 57.4. Let's see if we can get to 2867, 2868, and then eventually 2870. Yeah. 60. Okay, so the reason for these buys, as I said, is because price touched the EMAs. Now I said they're very bullish. Weekly, daily, 4 hour, 1 hour, all bullish, right? So sells are a counter trend trade, and I said this right at the beginning, the sells are a high risk trade, a very high risk trade, counter trend trade. The buys are a little safer. That doesn't mean they'll work out, but they're a little safer because you're trading with the trend, and prices tapped a liquidity area. I said there are several areas price could come and tap into to grab liquidity head up, right? The EMAs are one of them, the liquidity candle, the BRN, and the next EMA, right? So we tapped the first one, we rejected. If you look at the 1 minute time frame, yeah, we are rejecting that area. If you look at the 5 minute, we are rejecting that area, right? Let's see if we're going to continue higher or we're going to pull back and break below these low. If we break below the low, then I'll manage risk, but my stop loss is right under 2857.58. Okay, to continue to 2867, then 2868 and 2870. Gonna add another position there. So if I climb and get up, it's like to add it here. Yeah, it's better. 15 minutes more for the NYSE Open. So that's the setup that I'm taking today, these buys, and that's it. I'm not taking anything else more. It's gonna if price breaks this low, this M15 candle low, I'm closing everything, right? I'm not going to wait until price comes down here. If we break this low, I'm closing everything. We are bullish. We should continue higher. Yeah, doesn't make sense for price to come down and break the low as well. If we've broken the high, we should go higher. There is no business for price to come down and break the low, and then if that happens, then we're continuing low. So yeah, this is a 30-minute candle low. The idea is that now price has already created the bottom wick, so it shouldn't come down to create another bottom wick, right? It's already created the bottom wick. We should continue higher. But let's see. Let's see. I'll have to manage risk. I'll have to close all of these trades. Maybe keep the pending orders, pending order open, but close all of the other ones. Yeah, let's put a 0.74. Price is reacting to this M5 supply, M15. There's a break there. There is a support level right there. We're reacting to that. There is M5 supply right here. Drop, two basin candles and a drop, basin candle and a drop. That's what price is reacting to. It needs to close back a 5-minute candle above here. Inside this, above this level here, above 2864.5 to continue higher. Yeah, we're pushing down 5-minute rejection. This candle right here, it's causing a problem. Anyway, we're going to manage risk on this. Yeah, I'm going to manage risk on this. You got to follow a logical way of managing risk, right? So when price on every trade. So for me, this 15-minute candle has closed bullish, rejecting this area. Price has broken the high. If it breaks the low, I need to close some of my positions. There's no point holding all my positions, because if it breaks the low, it's less likely, not unlikely, it's less likely for price to go up. Less likely. There's a lesser chance. There's more of a chance of price going all the way down and hitting my stop loss, right? So you got to start, you weigh the pros and the cons, and you manage risk. So if price breaks this low, then I need to close most of my positions. Yeah, it seems like we are coming down. So the top wick to come down. Let's see. 8 minutes more for NYSE open. Is this a reversal, or is this just ranging for a continuation down? Right? We had volume. I said this at the beginning several times. We had volume at the NY open. Very likely to have volume with NYSE open. Very likely. But is that volume, is that move going to be a reversal or a continuation? Now I'm betting that it's going to be a reversal because we have a rejection. We have a liquidity candle, 30-minute in the London formed during the London session, and a rejection, a liquidity grab at the EMA. So if you go on the 15-minute, you can see that's a liquidity grab, right? 33 pip wick, grab liquidity. So is this a reversal to go up now? I could be wrong, I could be right. If I'm wrong, I need to lose less than what I had intended to lose. If I'm right, I have my TPs exactly the way I planned it, and I go through with the trade. It's that simple. Trading is that simple and that straightforward. You follow the same logic every day. You make decisions based on the same logic, on the same rules every day. Let's see. Seems like it's creating a top wick to continue down. 5 minutes more for NYSE open. Got news in about 30 minutes, 35 minutes. Which is shouldn't do much, shouldn't do anything in fact. Yeah, we're coming down. It's a top wick to push down. 4 minutes more for this candle to close. Let's see. If this candle closes bearish, then I might start to close some of my positions when the next candle breaks this current candle low. Okay? Same logic. If you close bearish, a strong bearish candle, that means the next candle is very likely to continue to push down, right? So why hold drawdown? Why hold drawdown? But still, we got to wait for another 4 minutes for the candle to close. Yeah, it seems like we are coming. There's a strong bearish 1 minute candle pushing down, create a top wick, and we continue down. It's got 3.5 minutes more. Let's wait. Still nothing. There's nothing. Still, we're just ranging. We're undecided. Is price going to go above? Price needs to close. A 15-minute candle needs to close above here, above this level, above 2864.5. 15-minute candle needs to close above 2864.5 for us to continue higher. If it doesn't, very likely we're pushing down. So you got to watch the 15-minute. 15-minute candle needs to close above 2864.5, above it, to continue higher. If not, we're coming down. A couple of minutes more. Let's see what happens. Again, I'd like to see visual. How I visualize this is I want to see a 15-minute candle close above 2864.5, right? Because that's the area that we're struggling at. The area where we're struggling it as is a decision point. So once you have a bullish candle close above it in your favor, that means price is running in your favor. If you close below it at a decision point, that means price is going against you, right? Simple logic. Got to follow that simple logic toward when you're making trading, when you're managing risk. Still a minute more for the candle to close. Let's see. And that's a close of 30-minute candle. Let's see if we close here. If the 30-minute candle closes above 2864.5, the next one should break the high and continue. Why not this? Okay, don't know. Anyway, 44. Yeah, let's see. Close in below. Closed above. Let's see, the 30-minute candle should break. Yeah, we broke the high. We should continue. There's the NYSE open. Yeah, okay. Partial positions closed there. Get to, let's see if we can get to 2678. Now, managing risk becomes a lot more easier now, right? As candles close, you got to follow the same logic. Now I have a 30-minute support created at a high liquidity area, 30-minute support form, right? There's a 30-minute time frame. The indicator also shows 30-minute support form. Now if price comes and breaks this low, I can bring my stop easily under this, right? So again, partial positions closed. So yeah, we're running well. Next TP is 2870, and then 2872 is the final TP for me, right? So that anticipating a total of about 100 pip move up, 2870. So let's see if we can get to 2870. But now I've locked in profit at logical levels. At logical price action levels, I've locked in profit. So now even if price comes and stops me out, now my stop loss is going to be under 2860.74, under this candle, under this M30. Because price has broken the high, it has no business coming and breaking the low again, right? So, but even if I do have my stop loss here, it's still, I'm losing now, or if I bring it here just under this, that's about 25 pips and 17 pips, which is good, right? So anticipation is price continues higher. Now, if you remember this, we spoke about this several times this week. Look at that. That arch kind of form. Now, again, I'm not a pattern trader. I'm not a pattern trader. I do not look at patterns. I don't understand patterns. I'm not a pattern trader. But this just, I'm a liquidity. I look for liquidity. I'm a liquidity trader, right? So when you see this, this is low liquidity. Low liquidity. You've got to learn to identify these, right? This is a lot of liquidity pushing price down, right? So low liquidity, so we should get to 2870 pretty easily, and above this pretty easily, right? So that is why my final TP is around 2872, but we should get to 2870 pretty easily. Yeah, we're coming there. Now again, remember what I said. NY Open had a lot of volume, right? First a 50 pip candle and then a 70 pip candle, right? NY Open. And I said, technically, not all the time, but technically when that happens, NYSE Open also will have a fair amount of volume. I don't know how much that volume is going to be, nobody knows, but might have a fair amount of volume. So when it does have a fair, if you're anticipating a fair amount of volume in NYSE Open also, the move is either going to be a continuation or a reversal, right? Less likelihood that it's going to range. Less likelihood, it's less. The likelihood of price ranging in NYSE Open is less. It's not, there are no certainties, right? It can range, but it's less likely that it'll range. NY Open had volume, NYSE Open will have volume. That is exactly what you're seeing right now. You're seeing NYSE Open have volume. This is a 15-minute candle. We've already made 50 pips on that candle, cross 50 pips, right? Now, if it is going to be a reversal, it could be a reversal or a continuation. Now you've got to look at the chart and look at price action. Look at the liquidity areas. What is price doing? What is it showed us? It showed us that it's rejected a liquidity area. It's grabbed liquidity, created a liquidity wick and grabbed liquidity from the EMA. So if there's going to be volume in that, that's a trade that then I can anticipate, that I can look to take. And I can anticipate a move up, right? Grab liquidity, a continuation higher. Okay, so anyway, I've been here now over 2 hours, okay? That's going to be the end of the stream. I'm not going to give out any trade ideas because this is the one that I took is the trade idea for the NYSE Open, the move up. Now, one of two things can happen. I'm just going to give out these two ideas. You're welcome to stay on the charts for the next 2 hours, 2.5 hours, or even 3 hours, or come back after an hour and a half and look at the chart and see if any of these ideas play out. I'm going to give them in terms of ideas and not in terms of trade setups. Okay, we're just about to hit that the next TP level, 2870. Yeah, there we go, 2870 tapped. Now the trade is, even if price comes and hits me, it's still a net gain trade, right? So the idea worked. The idea that we had worked. Anyway, let me get rid of all of these. Keep in mind why I drew this, right? I hope you remember why I marked 2872. Okay, I'm not going to go back into that. Anyway, so here are the two things that could happen over the next couple of hours, even next 2 to 3 hours, right? We come back here, reject the initial idea. We come back, reject around 2872.67 above that or at that area, form M30 resistance again and push down. That means the initial idea of price rejecting, sorry, give me a second. The initial idea of price rejecting the London high. That's the original idea. Price rejects the London high and pushes down. Got to wait for M30 resistance to be created around this area. So if you don't have a 15-minute candle close above this candle, above the open of this candle, the open of this candle is around 2872. So if you don't see a 15-minute candle close, a bullish candle close above it, above 2872, or a 30-minute bullish candle close above, better always 30-minute, right? When you're taking counter trend trades, always look for higher time frame confirmation. When you're a session trader, that time frame is M30, right? I hope that's clear. So if you don't see M30 candle close above 2872, close above 2872, or even a 15-minute bullish candle close above 2872, it's more likely that price is rejecting the London high and heading back down. If you want to take sells, wait for M30 resistance to form. Always safer stop loss is above the liquidity candle high. The more aggressive stop loss is above the M30 candle high that created resistance, right? That's one idea. And then again, your TPs are your liquidity levels, always this. These are your target areas. This is where price is heading to, okay? If you're looking for buys, we've already formed M30 support and we're pushing up, right? You got to wait for this M30 candle to close. Got a long time for this M30 candle to close. Got 21 minutes. At the close of this M30 candle, that'll be the close of the 4-hour candle. The 4-hour candle also will close in 21 minutes, right? So you got to wait for that 4-hour candle to close. Don't take any buys until the 4-hour candle closes, because the 30-minute support has formed. The move has already happened. It's finished. The move is already on its way, right? It's not finished. We don't know how far it's going to go. So, but it's already happened. The M30 support formed. Price went up. Okay. If you want to take buys, wait for price for the 4-hour candle to close and wait for a pullback. So ideally, you want to see a 15-minute candle close above this, or a 30-minute candle close above this, a bullish candle close above this candle open. So above 2872, you want to see a 30-minute or a 15-minute. Better a 30-minute. Always better a 30-minute, right? A 30-minute candle close above 2872. That confirms the price is heading higher. After that, wait for the pullback. Wait for the pullback. You can wait for M15 support to form because it's a trend trade, or if you want a safer trade, wait for M30 support to form and take the trade to go up. Those are the two ideas, right? I'm not going to get into details of where to place your stop loss. I've done that dozens of times. Stop loss is always safer stop loss above the liquidity candle high or the liquidity candle low, right? Aggressive stop loss below the M30. If you're taking buys, below the M30 candle low that created support. If you're taking sells, above the M30 candle high that created resistance. Okay, TP levels always at your liquidity points. Right now, going up, we don't have liquidity points because we have no liquidity levels, because we have no price action to the left. But coming down, we have our liquidity levels. Right, the EMAs, the liquidity candle, the BRN, so on and so forth. Okay, that's the end of the stream. I'm going to let this play out. I'm not going to do anything because I'm going to wait for the 30-minute candle to close. I'm not going to do anything until then, right? If price comes down, I'm going to bring my stop loss just under here. This low is 859, so 8498. That's 839. Okay. Okay. Yeah. And I'm going to wait for this 30-minute candle close. I'm not going to do anything. My TP is I'm going to leave my TP there. If it gets there, that's about a 100 pip move, with about yeah. So basically the stop loss is under here. If price breaks this low, I close everything. Okay. I will put an alert here just around the entry price to see if price is coming back down, and then come to the chart and watch it. That's what I'm going to do. But otherwise, I'm going to let this run to 2872. Okay. That's it. I'll be back tomorrow. Stream has gone a little over 2 hours. I'll be back tomorrow, same time, 7:30 a.m. EST. We'll do our prep work analysis, and then we'll look for setups. We're getting close to Friday. Friday's NFP. Should have a lot of volume because this week has shown a lot of volume. So again, that's an idea. Just like how you look at the sessions and you make a decision, right? A calculated decision on how there might be volume with the next session open. It's the same logic that you follow to look at Friday. There might be a lot of volume on Friday because we've seen 3 consecutive days with a lot of volume, candles making over 350 pips, 400 pips, right, in a single day. So it's very likely that it's not a certainty. There are no certainties trading. There's a lot of a likelihood. It's very likely that there'll be a lot of volume on Friday. All right. See you guys. Have a great rest of the day.